And I think it shocks people to find out that this industry is so unregulated. There's almost no barriers to entry to call yourself a tax preparer and start charging people to prepare taxes. And I'm sure you guys have seen it. I won't throw out the name of the person, but there's all those Facebook ads of this guy selling these courses of, oh, no experience necessary. Go start a tax prep business. And people are doing this. And a lot of people think, oh, my returns got accepted by the IRS every year, so they must be doing it right. And that's not how it works, right? Like, you could go 3 years down the line and all of a sudden you get all these notices that your taxes have been done incorrectly for years and you owe six-figure tax bills and penalties. And yeah, I think this is a super important topic, and it's something to keep in mind. And I think it boils down to, like you said, there shouldn't be big surprises, and good or bad surprises, right? Like, you shouldn't be having all these profits in your tax professionals. Like, guess what? You owe no taxes this year. Like, that's probably a warning sign too, if it's unexpectedly great news. So no surprises on either end. Like you said, no repeated notices. Notices are going to come. If you're in this long enough, notices are going to come. So getting a notice, don't go jump down your tax preparer's throat and go look for a new one. But if they're constantly coming over and over again, right, and more importantly, your tax preparer can't adequately explain to you why these are coming.
Exactly. And it's such a changing landscape when it comes to tax law, tax legislation, especially years like this with an election coming up. So I think there is going to be a natural component of learning alongside your CPA and figuring out how your business fits into the new set of tax laws and the ever-changing landscape when it comes to that. So there's a natural friction when it comes to that, but I think communication, honesty, transparency is key in that relationship, and making sure your advisor, your CPA, is constantly assessing 2, 3, even 5 years down the line to see how you can fit into the new set of laws, because they're changing, quicker than you could ever imagine nowadays. It seems every 4 years there's a new tax bill coming out or sunsetting provisions. We've got TCJA about to sunset next year. So a lot of changing legislation that is really going to affect a majority of business owners out there. So make sure you have those conversations with your CPA. Make sure they're on top of it. And if they're not, set up a meeting with CPA on Fire. We'll make sure you're taken care of there.
Cool. Yeah, that makes sense. So let's touch on that. Someone shoots an email and they want to set up a meeting. What's that initial consult with you look
we'll
like?
Initially just do a client fit assessment and get to know the owner, the business owner, what sort of situation they're in, what sort of earning spot they're in, and whether or not they just fit our typical client profile. And assuming it's a good fit there, assuming we know we can service them, offer a lot of value, then we'll spend a little bit of time, put together a custom tax plan for them, and have a second meeting where we'll go in depth with a technical analysis of what opportunities we think they may have been missing out on, or what are now available to them that maybe their previous CPA wasn't aware of. And so that's where we really get in depth with the analysis, let them know the estimated savings that we can offer them, and really a tangible estimate of the value that's coming their way. And that's really where a majority of the first year value is derived from. So just after 2 hours of speaking with new clients, we can have a full plan together for them and make sure that they're taking advantage of all those opportunities. And assuming they want to move forward with it, they're comfortable, it's enticing enough for them to want to pursue, then we'll set up those quarterly meetings throughout the year, and we'll work together with them for the implementation of each of those strategies. There is a lot of work that goes into capitalizing on each strategies, whether it's setting up new retirement accounts, whether you're taking advantage of the Augusta rule or employing children throughout the year, anything like that. We'll make sure they're adhering to the compliance and the regulation requirements of it. And so that's done through constant check-ins throughout the year, and seeing how the projections fit with the actual year-to-date activity. So there's 4 or 5 different touch points just in that first year alone to make sure that the foundation is really there, that we're executing on every opportunity, that we're implementing each of those strategies effectively and correctly. And then we've also got a year-end touch point where we'll walk through all the strategies together, take a look at everything that we've implemented throughout the year, let them know the expected savings that are actually accruing at that point, just so that there's no surprises. And if business fluctuates from any of those projections, whether higher or lower, then we can let them know the effect on their tax bill. So it's all done currently throughout the year in real time so that there's no large surprises in April. So it starts with that first client fit assessment. Then we work through the custom tailored tax plan there. And then if the client is wanting to pursue, if the value is there, we're not going to bring you on or charge you anything if we can't offer you any value. If you're truly taking advantage of everything, I'll let you know. We'll be honest there and we'll say, have a great day. Your current CPA is taking advantage of everything. Props to him. But typically that's not the case nowadays with everything that's available. And through that technical analysis, then we'll set up that tax plan, put together an action item list throughout the year and make sure we're executing on that through those quarterly touch points. So that first year is dense. There's a lot of support and communication that's required through it. And then hopefully by the end of the first year, we aim to have that on auto drive. We aim to have the client executing their operations in a manner that they're naturally taking advantage of all those different opportunities to them. But that takes work to get to that point, but that's the overall goal with each of our clients.
Yeah, I think that's the key. It takes work. If you're going to someone that you're thinking about moving to and they're just like, oh yeah, I'm going to get you in the Augusta rule and I'm going to save you tons of money. And they're not going through your prior tax returns in depth and then pointing out like, hey, this is what you did, this is what you could have done, then it's not the right fit. This should be an intense process in the beginning of looking through your prior returns and telling you what they did and what they didn't do. And even if we can't come in and say, hey, we're going to wipe out this six-figure tax bill, if it's just saying, hey, you're still going to owe six figures, but we're going to be on you throughout the year. Hey, this is coming. This is what it's looking. Set this much aside so that when you get to April 15th, that six-figure tax bill is not a shocker. You're prepared for it. So sometimes you can't save a client money, right? Or a lot of money. Sometimes they're doing all the big stuff already, but they're just not prepared and they're not hearing it throughout the year what that's going to be. I think it's a combination of what can we save you and how can we prepare
And it's,
for it.
If you think about it, it's a privilege to have a large tax bill. If you're really executing on that high growth phase of the business, the market is very receptive to what you're offering, you're going to incur a good amount of taxes. That's a natural way of life living in the U.S. So what we want to do is make sure you're paying just a minimum amount that you're legally required to pay. And if you do want to take that next step approach and start building your wealth as opposed to just high earning income years, really that's where a whole wealth of opportunity is available to you. And we can make sure that you're taking the necessary requirements to truly build your entire portfolio outside of just the business so that you're ready for retirement, that you're able to capture the financial landscape that you really want to have for retirement. And so that's really, we take a step outside of just business compliance, business regulation, and take a look at the individual, the owner themselves, and make sure that they're building the wealth in a tax advantaged way so that they can keep that hard-earned cash in their pocket and use it at their discretion.
Awesome.
Hey, Josh, I would just add this, just like maybe use like a case study, right? So this is who we just worked with somebody recently that Andrew took the lead on. You've heard me talk about clarity and how clarity leads to success, right? And the sooner the more clarity the entrepreneur has on what she's doing, the more success and the more she's able to execute on it. So this client came, talked to us, right? Had a 5-year exit in mind. And Andrew really put together, okay, what does that exit look like? How today can we maximize the value of that exit from a tax perspective? We were already trying to do that from him from a financials perspective, but from a tax perspective. And then with his growth plans, like what we were going to do year 1, year 2, year 3, he had a 5-year exit, like all the things that we were going to execute upon. And then also at the exit, how much from a percentage perspective, what we could save him if he did some restructuring or some things. And man, that would be like, if your tax advisor's not preparing you year by year with a strategy that matches your growth plan and ultimately potentially your exit plan, I just want to paint a picture of what the entrepreneur should be receiving from their tax professional. And that's that clarity year by year of what opportunities present themselves. But to Andrew's point, it is a strategy, right? I think a lot of what you mentioned, right? Facebook, they come out and they go, okay, you're taking advantage of the Augusta rule or you're employing your kids, right? That's one aspect of what we're doing. But the next aspect is there's going to be opportunities, right, to be able to save money. Does it make sense? There's always what we always talk about, levers. You pull one lever, it affects 3 others. But strategizing each year, right, through that 5 or 10 year period, like how are we setting ourselves up both for the business and from the tax perspective is huge. And just depending on the volume of your business, tens of thousands of dollars to millions of dollars, right? These are opportunities that you could be saving.
Yeah, no, I think that's a great point too. We see all these tax tips on TikTok and everything else, and it's not the way it works. It's not just a one-off, hey, put my kids on the payroll, let's do that and save taxes. Like, it's all got to be part of a broader strategy. If you're constantly just finding these one-off tips and trying to incorporate them, you're going to end up with a mess on your taxes, in my opinion. So yeah, I think it's part of a broader strategy.